Hi there and welcome to Smart Finance AI. This channel is all about making personal finance and investing accessible and interesting. All content is AI generated and is not financial advice. In this video, we're going to cover the basics of investing for beginners. We know that investing can seem intimidating, but with the help of our AI algorithms, we're going to break it down into simple terms and show you how to get started.
Part 1. Understanding stocks and bonds. Stocks and bonds are like a married couple. They may be different, but they complement each other. Stocks are like the adventurous spouse who wants to take risks and go on exciting new ventures, while bonds are the more conservative spouse who wants a stable and predictable income. Stocks represent ownership in a company. When you invest in stocks, you become a part owner of that company, and as the company grows and becomes more successful, the value of your investment also increases. It's like owning a piece of a lemonade stand, but on a much larger scale. Bonds, on the other hand, are a form of debt. When a company or government needs to borrow money, they issue bonds to investors. In exchange for lending the company money, the investor receives regular interest payments and gets their original investment back at the end of the bond term. It's like lending money to your friend, but with a little more structure and security. So there you have it, stocks and bonds in a nutshell. Like a married couple, they may have their differences, but together they can make a great investment portfolio. Part 2. The importance of diversification. Diversification is like having a superhero team. Each member brings their own unique strengths and abilities to the table. When it comes to investing, diversification means spreading your investments across different types of assets, such as stocks, bonds, real estate. Why is diversification important? Think of it this way. If you put all your eggs in one basket, you're essentially turning that basket into a dangerous game of egg roulette. If something goes wrong with that one basket, your eggs, or investments, could crack. On the other hand, if you have a diversified portfolio, you have a better chance of weathering market ups and downs. It's like having a well-rounded superhero team. When one member may be weak, another member steps up to save the day. This helps to minimize your risk and ensure that you're not too heavily invested in one area that could potentially suffer a loss. So don't be a one-trick pony with your investments, diversify your portfolio and give yourself a better chance of reaching your financial goals. Part 3. How to start investing with a small budget. Starting to invest with a small budget can seem like trying to climb Mount Everest with just a pair of flip-flops. But don't worry, it's definitely possible. Here are a few ways you can get started. Invest in low-cost index funds. Index funds are like a trusty steed in the investment world. They always get you to your destination. They offer a low-cost way to invest in a diversified portfolio of stocks, and many index funds have a low minimum investment requirement, so even Scrooge McDuck would be impressed. Consider a robo-advisor. Robo-advisors are like having a personal investment genie at your fingertips. They use algorithms to manage your investments for you and typically offer low minimum investment requirements and a low-cost way to invest in a diversified portfolio of stocks and bonds. Start with fractional shares. Some online brokers now offer the ability to buy fractional shares, which is like buying a slice of pizza instead of the whole pie. This way, you can start building a portfolio of stocks without having to mortgage your house. Use dollar cost averaging. Dollar cost averaging is like a slow and steady turtle, it wins the race. It's a strategy where you invest a fixed amount of money regularly, such as once a month, rather than all at once. This helps to average out market fluctuations and can be a great option for those with a small budget who want to gradually build their investment portfolio over time. Remember, the key to successful investing is to start early and stay consistent. Even small investments made on a regular basis can add up over time, like a savings account on steroids.
So there you have it, the basics of investing for beginners. Remember, investing takes time and patience, but with the help of our AI algorithms and a little bit of research, you'll be on your way to a smarter financial future. Don't forget to like, comment, and subscribe for more AI-powered personal finance tips and tricks.